Hello, everyone. This is Neil, actor, musician, digital artist from Orlando, Florida. Coming at you with another trade that I made on the 25th on MNQ, and pretty much all my trades are going to be on MNQ. As I'm learning the Nasdaq futures and how they move, and I'm always trading the micros and not the minis. The minis are 10 times the risk, but later on we'll get to that. So in this trade here, you can see, as usual, what I do roughly 15 minutes before the market opens. I'm going over the daily. I'm marking my previous day highs and lows, pre-market highs and lows, um, and just waiting for the market to open. And my normal trade within the first hour, of course, is marking the 5-minute highs and lows. And with this trade, with my normal trades, I only give it an hour to see if it works. And if it doesn't work out, then I look for you know another uh, another trade. Just to I look to see. I try to be patient and wait and see if my edge forms, and that's the thing. I always have my edge. I always have my risk defined and a target. Um, so you can see here, I am waiting for the 5-minute candle to close, which is always going to be off screen. You're not going to see my 5-minute chart. Um, this is the 2-minute chart, which is what I always play on. And depending on what happens, in the day, there's several different kind of trades that I would take. And this one's, of course, my 5-minute, basically an opening range trade, which is called fences trade, which I learned off of a guy named Stephen Adams, who runs another trading channel. Um, so yeah. Um, Now the video is sped up, of course, up until I take the trade. Um, and so we're coming into the first 5-minute closes at the close here pretty soon, and I'm gonna get that opening range um, marked on the chart. And with this, I'm looks like I'm switching around the time frame just to see if there's a another play. But I got the opening range um, uh, built now, um, marked off. So I'm waiting to see if there's a candle as per the rules. The first candle closed outside of that range, and then I wait for a retest of that range. And I'm marking the halfway point as a default of a stop, but I'm also marking where a logical stop is, a much tighter stop because I mean that minimizes the amount of risk I have. Um, Also, but you'll also see on this chart a power bar play that I could have taken as well and have a good open. But you know, so if I would have taken that power bar play, you can see that that power bar, which is also a Steven Adams trade, it clears swing lows to the left. It clears a lot of the lows to the left. All right, so here's the first close, and then there's a retest, and I said this is close enough for a retest. I also have my stop marked, and I'm waiting for this candle to close to get in on the trade. And so, as you can see here, it's going down pretty good. And unlike the previous day where I anticipated the close, I'm waiting for the candle to close because that's the rule. When the candle closes, I'm in the trade. If it doesn't close outside of outside of the that box there, then I don't take the trade. I wait until I get another candle close outside of that trade, outside of that box, and then I'm in. But I have the risk defined. Um, so we got about a minute left on this bar here. We're just waiting. It's holding steady, and here I see that it could potentially be going up. The buyers are coming in, and taking out those, and taking out the sellers. So it looks like it's not going to close outside. It's starting to look like that, but then it comes right back down, and I'm waiting to see how close it is. If in and I'm saying to myself, if I have that much of a wick on the downside, I'm likely not going to try to get in on this trade. But it ended up not happening that way. It ended up coming down and closing near those lows, um, even though it's looking like it's going to start turning the other way. Um, and I'm looking to the left to see what the structure is. And I'm always looking to the left to see what the structure is. And here it was pretty much at the beginning of a trend where all of this happens, the power bar defenses. And here's the close. I get in, and that's a pretty good price. And you see that it's at the whole dollar mark too. And typically people love the whole dollar mark. So this could go in any direction, but I have my entry, I have my stop defined, and I'm seeing where my profit targets are. And so I'm adjusting, um, I'm adjusting my indicator here to see where my profit target is. And so I put in my order to profit target order for, I'm putting in my order to take profits. This is an order to cancel other. This is a bracket order, is what this is. So once either target is hit, the stop or the profit target, um, then it cancels the other order. That's what a bracket order does. All right, so what I'm thinking here at this time, if it closes at or below the one-to-one target, then I move my stop up just enough to cover commissions, and it becomes pretty much a free trade at that point, whether it turns against me or not. So that's the next rule is once it hits that one-to-one and closes there, then I move that profit target up. And sometimes even if sometimes if it's close enough, if it logically makes sense, then sometimes I will move it up anyway to cover commissions and it still becomes a free trade. So it depends on how close it is to that one-to-one target. But once it reaches that one-to-one target or close to it, then I move my stop up and it minimizes the risk even further. So I always try to make sure that I can logically move that stop up where it makes sense and to minimize risk. So I'm always thinking minimize the risk as much as possible if it makes sense. And here it closed, and so I move my stop up to cover commissions and make a little bit on top of that. And so here now it kind of comes back a little bit, but then it keeps going down. It's now moving down towards that profit target that I set, and I'm always going for a 2-to-1 profit target, always. And so in this trade, it turned out to be an excellent trade, regardless of where it may have gone. The entry made sense. The the entry was the entry was placed based on rules. That stop was placed based on logically where it made sense, which is the swing high of this trade. And the profit target was taken based on where that stop was. So this is a 2-to-1 profit target. And it's getting close there, and I'm cheering this thing on. I'm actually getting a little excited because this is not because of how much I make, but because this is an excellent trade, no matter if it won or lost. This is a textbook trade, in my opinion, an A plus setup, and boom, there's the profit target. And I continued watching this trade go, and it kept going down. And I'm still learning how to trade. I'm still learning at this point. And there's going to be some point where I'm just going to let you see I have my indicators, the SMA, the 20 SMA, the 9M SMA. At some point, I'm going to let the indicators determine where my stop is. But for right now, I'm going for a strict 2-to-1. Um, just so I can learn what the chart looks like, the structure, and make sure that I take my profits when I'm supposed to. So you can see this kind of came back a little bit, but then as I watched the trade later in the day, which is what you're not going to see on this video, it continued to go down. And you can see this one hit 3-to-1. So this was a good trade regardless. Well, I hope you got a lot out of this and you see what I was thinking. And And with that, have a good day.